This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Not too hot, not too cold. Why oil prices may be entering a level that is just right for the economy and your investments.
Doubling down, Amazon makes a big investment in India, and it's not the only major American company on the prowl there.
Shaken faith, why 8 years after the housing crisis, the American psyche has yet to heal. All that and more tonight on Nightly Business Report for Wednesday, June 8th.
Good evening, everyone, and what a day it was. The Dow closes back above 18,000, but we begin with big news about oil, where prices hit a new high for the year, and that may be just what the economy needs. Prices settled above $51 a barrel. That's an 11-month high and nearly double the lows hit in February, thanks to one of the most powerful crude rallies in years. Experts say a sustained price just above $50 a barrel takes some of the pressure off of producers. Yet it's not enough to translate into sharply higher prices at the gas pump for consumers. Jackie DeAngelis takes a look at where oil prices may go next and how long they may stay in this sweet spot.
Oil prices are on the rise, a big bump up from February's lows where crude got dangerously close to $26 a barrel. An interesting dynamic emerging now. In a higher price environment, perhaps producers will pump more crude.
Producers will be feeling a little bit more at ease right now, but I think we're just beginning that trend. I think the real profitability area is between the mid-50s and $60. I think then they'll really start to think about getting really back into the game.
In fact, the Energy Information Agency reported today that U.S. production rose slightly for the first time in 15 weeks. And last week, Baker Hughes said that rig counts increased, which surprised the market. But what happens when prices go up and producers pump? They actually push prices right back down.
That's the way economics works. It's supply and demand. It's like anything else. At this point, at the higher prices, it's more conducive for people to explore and to pump more.
The good news is that while oil prices climb, gas prices are staying relatively low. AAA reporting that the national average for a gallon of regular is $2.36, certainly up from this year's lows, but about 40 cents lower than this time last year. Will gas prices continue to stay low? They actually might. Consensus seems to be that oil prices have limited upside from here.
I would think we'll move up through the end of this month. Probably at the most, my projection would be about the mid-50s. I would say even 54 or so is about the upper range of this. The driving season is definitely a factor, but we have to see let's say the inventories go down a bit. So far, we really haven't seen what we want to see as far as a real impetus for the market to go up.
Remember, though, that last year at this time, we saw crude prices peak around 60 in June. Then they tumbled back to the high 30s by August. It's still a little too early to say that we won't see that pattern again. For Nightly Business Report, I'm Jackie DeAngelis.
So let's pick up on where Jackie just left off. How long does this sweet spot in oil last, and what will it mean for the U.S. economy and the consumer? Joining us now to discuss that is Scott Roberts, Senior Portfolio Manager at Invesco, where he covers the oil and energy markets. Good to have you here, Scott. Welcome.
Thank you.
Let's start with what Jackie just left off with, which is, we did see oil move up sharply at one point in this most recent cycle, and then it moved right back down to $30. Where do you think we are right now? Is the level that we're seeing in oil now sustainable for a longer period of time?
Well, I don't think the consumer has to worry much in the short run. If you think about average gas prices around the U.S., about $2.35 a gallon, it's a pretty attractive level. And we're seeing that in data points like SUV sales, certainly pickup sales. So I think the consumer has a while to enjoy this price range. I think in the coming months, what's really going to weigh on oil prices overall is the massive storage amount we have in the U.S. We're still over 530 million barrels of oil in the U.S. in storage.
So let's talk a little bit about where you see in the out years, as they say in politics, 3, 4, 5 years down the road, you have a rather more bullish oil price in mind of about $70. And that seems to me because you're focused, unlike a lot of people who follow oil, you seem to be more focused on demand than supply.
Absolutely. One of the very quick things to see about oil demand is it grows each year. The exception, of course, would be 2008 with the financial crisis. But what we're seeing is population growth around the globe is leading to stronger demand for transportation. That means cars, trucks, planes, buses. And so we're seeing demand growth of about 1 million barrels a year. And that's, or I should say, 1 million barrels each day per year. That's a very strong number. Now, on the supply side, obviously the industry went too far with the CapEx dollars being spent. They had a massive pullback, and now we're seeing the change from the low in February to just about $51 today.
But is some of the pain that's being felt, for instance, in the shale sector and also in the energy sector? We've seen a number of companies have issue with debt and things like that. Do you think we've seen the worst of that?
Well, the pain's not over yet, and there's two very different worlds out there. There are those energy companies that have sustainable capital structures with great assets and low operating costs, and those that don't. What we're seeing year to date is something about $35 billion of debt that's defaulted from companies that were really over-levered and didn't have very good assets. On the flip side, we've seen just over $17 billion of new capital raised on the equity side from stronger companies. Those are the companies that have the best assets to low operating costs that are starting to look at adding rigs back into production.
All right, Scott, we'll leave it there. Thank you. Scott Roberts with Invesco.
And how about this? Stocks closing in on new highs. The rise in oil prices lifted energy shares, which in turn pushed the major indexes up. Also helping stocks is the belief that central banks are going to continue to support moderate economic growth. Read that, keep interest rates down. As we mentioned at the start of the program, the Dow Jones Industrial Average reclaimed that 18,000 peak, rising 66 points to 18,005. NASDAQ added nearly 13. The S&P 500 rose about 7. Its third day of gains, and just 0.5% now, 0.5% from its all-time high.
And there are a record number of job openings. The Labor Department reports more than 5.5 million posted positions in April. That matches the all-time high. The openings are across a range of industries, from manufacturing to trade to transportation. And while the report does show that employers want to hire more, the high number can also reflect the difficult time some companies are having finding the right workers.
The World Bank cut its global growth forecast to just under 2.5%. That's down from its previous forecast of just about 3%. The agency cites lingering commodity price pressure, sluggish demand in advanced economies, and weak trade. The World Bank's current forecast is more pessimistic than the IMF's outlook for growth this year.
In Washington, Indian Prime Minister Narendra Modi told a joint meeting of Congress that the ties that bind the U.S. and his country are indispensable. Modi received a warm reception from lawmakers, sharing his vision as he looked to deepen the relationship between the U.S. and the fastest-growing major economy.
Let us work together to convert shared ideals into practical cooperation. There can be no doubt that in advancing this relationship, both nations stand to gain.
Modi hopes that gain translates into a more prosperous India. And as Seema Modi tells us, U.S. companies also plan on being part of India's growth strategy.
India continues to garner the support of corporate America, partly due to its economic growth story and also its passionate pro-business leader, Narendra Modi. U.S. executives John Chambers of Cisco and Jeff Bezos of Amazon at a reception last night pledged their deep support for the Prime Minister's growth agenda.
I'm pleased to announce today that Amazon will invest an additional $3 billion on top of the $2 billion investment that we announced in 2014, bring our total committed investment in India to over $5 billion US.
With China slowing down, India's appeal as a destination for U.S. companies continues to grow.
You hear U.S. industrials talking about the opportunities in India, and clearly India has replaced China. And I think that's a story is only getting better. We've heard Apple talk about it. We've heard GE. We've heard Lockheed, all these companies.
Experts say in order for U.S. companies to prioritize growth in India over China, the Indian government will have to crack down on corruption, bureaucracy, and red tape, which Prime Minister Modi says he's working to improve. The question is when we'll see results. For Nightly Business Report, I'm Seema Modi in Washington.
Still ahead, why the scars from the housing crisis run deep even 8 years later. The automobile crash that killed the former CEO of Chesapeake Energy has been ruled an accident. The Oklahoma medical examiner said that Aubrey McClendon died of multiple blunt force trauma when his car crashed into a concrete underpass back in March. The crash occurred one day after McClendon was indicted on a single count of conspiring to rig the price of oil and gas leases.
Insured losses from the Canadian wildfire in the city of Fort McMurray near the oil sands are likely to total more than $3 billion. That estimate comes from the reinsurance broker Aon Benfield. The fire destroyed at least 10% of Fort McMurray, including more than 2,400 homes.
To the housing market now, which saw the volume of mortgage applications swell more than 9% last week from just the previous week. According to the Mortgage Bankers Association, the increase may in part be due to a slight drop in interest rates. The rise follows several weeks of declines.
Though it has been 8 years since the housing crisis, our next guest says some homebuyers are still dealing with the fallout from dishonest mortgage lenders and banks today. And he believes that the housing crisis has led to a breakdown of social order and a lack of trust in our financial system. He is David Dayen, journalist, and he is author of the book Chain of Title. Welcome. It's nice to have you here, David.
Thank you.
You know, it is surprising that the wounds go so deep on the one hand, but on the other hand, when you look at the complete and total collapse of the housing market, perhaps it should take that long to heal.
Yes, perhaps. The fact remains is that not only did we see dishonest lending at the origination stage and then dishonest securitizations where the investors were defrauded and told that the loans were of good quality when they actually weren't, but we saw dishonesty in terms of breaking the transfer process and the chain of title that goes from one entity to the other. And when individuals were foreclosed on, they were done so with false documents, which was a cover-up for this lack of chain of title. And so there was dishonesty, and the fraud was sort of layered on top of one another, and it really does engender this loss of faith in institutions.
Well, let me bore in a little bit on that. So you're saying that some of these people who bought houses with loans they couldn't repay, what was faulty about the foreclosure that caused them then to lose their homes?
Well, what was faulty was that the evidence that was used for the foreclosing entity to prove that they actually owned the loan and had an interest in it was faulty. It was fabricated. It was forged. In any other legal context, if you're using false evidence to convict somebody, the judge would throw you out of court, whether you were innocent or guilty. And the fact remains that every day in America, to this day, somebody is kicked out of their home based on a false document.
And as I understand it, you feel as though that's part of the reason, this lack of faith in institutions, that it has led to a sort of societal breakdown, if you will, the lack of trust that goes much further than in some previous financial crises. Is that correct?
Well, I mean, I think there's a lot of frustration, a lot of anxiety, and it gets to the lack of accountability. The fact that this is still going on today, we had settlements over this activity in 2012. You would presume that when you settle over unlawful conduct, that the unlawful conduct stops. And the fact that it's gone on and continued, and most people feel that there was not very much accountability for those who perpetrated the financial crisis and the associated frauds that occurred. And that runs deep sort of in the American psyche. It gets to fair play and justice and all these bedrock American values.
What responsibility do borrowers have in all of this? A lot of people took out loans that they really probably had no business taking out. I'm not saying that they weren't sold those loans,
right,
rather than being the buyers of them, but the fact remains they had no business being in them.
The fact remains that there are two sides to a lending contract, and just as the borrower makes a promise to pay, the lender is supposed to make a promise that they've underwritten the loan and seen that the borrower has the ability to pay. And so there's plenty of fault to spread around in that particular process. However, what we know and what is detailed in my book is that there was tremendous deception at the lending stage and also at the loan servicing stage. A lot of these defaults were servicer driven, where you had loans that were 2 cents short and put into default. You had loans, people getting foreclosure notices when they paid cash on their homes. There was a serious breakdown in the system of property records law, which is 150 years older than the Constitution. And when you have that breakdown, it really does have this sort of breakdown in the social order.
David, thank you. We have to leave it there. Thank you very much for joining us. David Dayen, author of Chain of Title.
Lululemon says it is back on track, and that is where we begin tonight's Market Focus. The company's CEO said inventory levels back in line, which led the company to reaffirm its full-year profit guidance, raise its revenue outlook. The athletic clothing company posted weaker than expected earnings for the latest quarter, but did see a rise in sales that managed to top targets. Shares of Lulu up nearly 5% to 71.48. Williams Companies warns that it may need to cut next quarter's dividend if its merger with Energy Transfer Equity falls through. The proposed merger's outcome questionable as ETE wants to restructure or end the deal. Williams shareholders expected to vote on the deal June 27. Shares today down more than 1% to 23.17.
Yahoo is selling about 3,000 patents. The tech giant has launched an auction and contacted potential buyers, hoping to generate more than $1 billion from patents that include the company's original search technology. Shares of Yahoo up a fraction to $36.97. After resigning last month for business misconduct, former Lending Club CEO Renaud Laplante may actually be interested in buying the peer-to-peer lender. Reuters says Laplante has been speaking to private equity firms and banks regarding a potential buyout. Shares of Lending Club up a fraction to $4.42. And Restoration Hardware is cutting its earnings and revenue guidance after swinging to a loss in the most recent quarter. The company citing a slowdown in luxury shopping. Shares finished the regular session up 2% to $36.10, but cratered about 20% after hours following that news.
Well, pigs may not fly, but pork prices certainly are. Demand is climbing, especially in China, and producers halfway across the globe are feeling the effects. Kate Kelly, who gets all the great assignments, reports from the World Pork Expo in Des Moines.
All-day breakfast menus at restaurants like McDonald's, the onset of the summer grilling and BLT season, all have something to do with rising pork prices. But analysts who watch this market say that foreign exports, which account for about 22% of U.S. pork production, are a big part of this story too, thanks to China.
We're seeing a shortage of pork, and so demand is red hot in China. They are currently scouring the globe trying to find pork to fill that demand. When you see Chinese hog prices literally double the price of U.S. hogs, the markets start to get a little excited.
Mexico has placed big orders for U.S. pork too, and seasonal trends make it likely that prices will go higher between now and Labor Day. So far this year, hog prices are up about 45%, making it one of the best performing major commodities. Still, we're a far cry from where we were about 2 years ago when we hit an all-time high of $1.34 per pound. That was amid a terrible porcine virus that wiped out about 7 million pigs in the U.S. Pork producers are happy to have left those days largely behind them, given that an estimated 7 million American pigs were wiped out. And many have installed truck baths or other decontaminating features, hoping to keep the animals as healthy as possible. It's all contributing to an overall sense of optimism at the moment.
We're back pretty much at full production. Consumer demand has been terrific. It's held in there very well. Our exports have done well. We've been able to compete against the competitive proteins, and I think that's why pork prices have remained strong and profitable for producers.
For now, the sun's out, the show pigs are preening, and farmers are riding high on the hog. For Nightly Business Report, I'm Kate Kelly from Des Moines, Iowa.
From pigs to pups. Coming up, combine an app with puppies, and one entrepreneur sees a recipe for business success. Shopping is going to the dogs. Americans spend billions of dollars on their pets every year, and now one startup is on a mission to grow its share of that market. Courtney Reagan takes us inside a high-tech pup-up shop.
You've likely heard about pop-up shops, a physical retail store that's temporary, where companies hope to build up their brand with existing customers or appeal to new ones. But what about a pop-up shop? Online startup Barkin Company is going from digital to physical, but here it's the dogs, not the people, doing the shopping.
This is Bark Shop Live. It's a pop-up shop here in New York City. Dogs can come in on a reservation system 5 at a time. They wear these RFID vests that transmit a signal back to a mobile app. So pup parents can follow along, see which products the dogs are most engaged with, and buy them easily right through the app.
It's a first-of-its-kind concept in an area of retail that continues to grow. Americans will spend $62 billion on their pets this year, up 4% from last year, according to the American Pet Products Association. But Barkin Company co-founders believe there's plenty of market share to be had.
Dogs today are much more like kids than they are like a hamster. And so we try to create products and services that really play into this idea that there's been a change in our attitudes to our dogs.
We want to bring Disney to the dog world. So when none of that has been created, there's just a tremendous amount of innovation available to you.
Many pet owners know 4-year-old Barkin Company for the monthly subscription BarkBox, which represents 75% of the startup's revenue. But the business has expanded. Barkin Company has shipped more than 25 million pet products to date, and its websites, which also have original pet videos, get 10 million unique visitors a month.
One of the company's more popular products is the Dognold, but there's Hillary Kitten too. Let's see which one Shopu likes the most. What do you think? Oh, Dognold.
For Nightly Business Report, Courtney Reagan, New York City.
The rich are getting richer, and according to a new report, they will be even more so over the next few years. Robert Frank has the details.
Well, you've heard of the 1%, but everyone should be on the lookout for the 0.01%. In the next 5 years, the world's millionaires will control more than half of global wealth. So where's a lot of the millionaire growth coming from? You guessed it, Asia, even as millionaire growth is slowing in North America.
We do see a slowdown in economic growth and also GDP development in some parts of the world. And also in others, it was also very weak market performance.
Yet the very rich are expected to see the fastest growth and gain an ever larger share of wealth. Households worth $20 million or more will see their share of wealth grow 9.5% a year through 2020. While those worth under $20 million will see their wealth grow at around 7.5%. The reason? Equities will drive much of the wealth creation in the coming years, and the very rich own the most stocks. And as for that exploding growth overseas,
Asia Pacific will overtake Western Europe in 2017 in terms of size to become the second largest region.
And women will play a growing role as well, controlling a third of the world's wealth. For Nightly Business Report, I'm Robert Frank.
And speaking of millions, Forbes is out with its list of the top 100 earners in sports. And 2 out of the top 3 made multi-million dollars playing soccer. In third place is LeBron James, who earned more than $77 million. Number 2, Lionel Messi, who plays soccer for Barcelona, and he made $81 million. The highest paid athlete is Real Madrid's Cristiano Ronaldo, with total earnings of $88 million. Only 2 women made the top 100, Serena Williams at number 40, with earnings over the past year of nearly $29 million, and Maria Sharapova at number 88, who today was suspended for 2 years from women's tennis for admitting to using a banned substance. And that does it for us on Nightly Business Report. I'm Sue Herrera. Thanks for watching. We want to remind you, this is the time of year your public television station seeks your support.
And I'm Tyler Matheson. We really thank you for your support of NBR and public television. Have a great evening, everybody. We'll see you tomorrow.